Hello everyone. Hello Internet. Welcome to Capital Letters. This is a show about middle market investment banking. What the hell is it? Why should you care? I am Jesse Welch. I'm with MidCap Global. We are a boutique investment bank that helps companies get real deals done and fast. Companies that are in need of capital, great companies, but they don't necessarily know exactly how to get it. Now, this show, however, this show is actually for lenders, commercial lenders, non-bank lenders, private credit, basically anyone who is tired of wasting time on bad deals and somebody who wants clean, qualified opportunities instead. So episode 1, the inaugural episode, is titled, What is Middle Market Investment Banking? And why should you, as a lender, actually care? So let's start by zooming out a little bit, providing some context. What is the middle market? So if you have worked in finance for 5 minutes or more, you've heard that term a dozen times. You've heard middle market private credit, middle market M&A, middle market sponsors, non-sponsored middle market deals. But if you ask 10 different professionals to define it, you're going to get 10 totally different answers. Some people define it by revenue. Okay, sure, that's great. Some people define it by loan size. Absolutely validity in that perspective. Some people just kind of know it when they see it, like a je ne sais quoi. That's great too. At MidCap Global, we define the middle market very simply, and I promise this is going to stick. The middle market is anything that is not rated. So let's talk about ratings for a second. If I go to apply for a credit card, I am rated. I have a FICO score, which more or less tells the banks how risky of an organism I am. Small businesses, if they want a loan, they're also rated. They have a DUNS number. They have Experian business credit ratings. Apple, Tesla, Microsoft, they've got Moody's, they've got S&P. Those companies are all rated. Every REIT is rated. All of the public companies are rated. But there's this massive, massive world in between, this huge gray zone of companies that are not rated. And that's where we live. That's the middle market. They're too big for their local bank, but they're not quite institutional yet. So that's the middle market, and that's what we like. At MCG, for example, our smallest deal is $9 million. Our largest, $9 billion. That is not a strategy. That's completely coincidence that 9 and 9. But it goes to prove the point that what defines the middle market is not deal size. What defines the middle market is not rated, no internal capital markets team, and no idea how to run a proper capital raising process the right way. But they're still real companies. There's still real revenues, real growth, real capital needs. And what they need are real bankers, people who can see around corners, the kind who know how to underwrite with nuance, who understand risk and know how to turn that into reward. Not the type of bankers that sit at a teller and take your $500 weekly check into a deposit. The type of people who, quite frankly, know how to close fucking deals. And that's what this show is for. What a good investment bank actually does. Let's talk about that. Let's talk about the role of an investment bank in the middle market. Any market, really, institutional or not a lot of small businesses need investment banks. But what do they do in the middle market specifically? There's a very wide spectrum. There are brokers who blast PDFs around, and then there are actual deal makers. A good investment bank, one that lenders trust, they're going to do a couple things right. First thing, they filter. They filter very aggressively. They say no a lot more than they say yes. If a deal's not real, or if it's not ready, it doesn't go out. If the client's not ready, it doesn't go out. If the deal itself or the balance sheet doesn't really tell the right story, it doesn't go out. Secondly, they dig. They dig in before the lender ever sees the deal. That means shaping structure, clarifying the ask, pressure testing the valuation, aligning the borrower with the market, making sure that the borrower understands what the appetite of the market is right now. They're going to prep the data, they're going to tighten the story, they're going to educate the founder and the sponsor, or even maybe just the CEO who was hired on to lead the team. But that's really one of the primary places that they're going to bring in value. Most importantly, they save everyone time. A lender does not want chaos. Banks don't like chaos. They don't like uncertainty. They want a deal that's halfway to a yes. Real bankers, they are looking for people they can work with that can get them to that place much faster. Bad bankers, they blast teasers and then they pray to the deal-making gods for something good to happen. Good ones, they translate their needs into lender terms. They don't just bring deals, they bring deals that are already halfway to closed. Why should lenders care? Well, my answer is because these deals are real and there's money to be made. And forgive me if I'm wrong, but I'm pretty sure bankers love making money. So maybe these deals aren't rated. Maybe there's no mega sponsor. Maybe there is, but probably not. However, the business works. There's real cash flow. There's real people running real operations who know exactly what they're doing, and they have vision and passion, and they need someone who gets it. They need someone who can underwrite the risk, who can push on the structure where it matters, and who can close. And if you're fast and you're sharp, you can win these deals. They're not bake-offs. It's not the Sim Olympics. They're real companies that move on trust and execution. It's very relational. The middle market is underserved for one very particular reason. It is messy. It doesn't fit in a drop-down menu. You can't check all the boxes mindlessly and come out with good deals and profits. However, there are people out there cleaning it up. Investment banks who know how to organize the mess and bring signal. Now, if you're a lender and you can see through the noise, this is your space. This is where you make money. Okay, so what happens when it's done right? I'm gonna give you the dream scenario for a middle market deal. It doesn't always happen like this. Quite frankly, it almost never happens like this. Each one of these steps, there's a lot of ambiguity in there, but let's just start from the beginning. A founder calls. They're growing, bank tapped out, they need capital. They're not structured for a raise. Maybe they've never even talked to institutional lenders, but their numbers are real. So banker steps in, asks the hard questions, builds the model, preps the data room, shapes the story, figures out what the lenders are going to look for and what they need to be comfortable, and then puts those pieces into place. Now, once that's all done, that banker sends it out to 5, maybe 10 lenders. Not 50. One bites. Call goes really smooth. Term sheet in 2 days. Wire in 3 weeks. That's the clean version. No drama, no babysitting, just capital deployed the right way. When it's time to execute the deal gets executed. That's what happens when everybody knows what they're doing, when the deal is tight, when timing is respected, when the middle market works. That's the win. Now, does it always happen like that? Of course not. Each one of those steps, there's a lot of preparation and a lot of work that goes into it. But a real good banker with a really good lender and a really good operator can make it seem seamless when the deal is actually being closed. But the only reason something looks that great is because of all of that lead up that goes into each one of those steps to making sure that that deal is very succinct. So what is this show about? What's next? This is the inaugural episode, so I feel like I want to tie this up with a little bit of a shameless plug for us and what we do and what you can expect if this was not so painful that you want to stick around. This is capital letters. It's not fluff. It's not buzzwords. It's just deals, straight up. We're going to talk capital stacks. We're going to talk timelines, borrower behavior, market structure, execution under pressure. Sometimes it'll be me. Sometimes it'll be operators, credit heads, sponsors, founders, guests, hopefully people who are much more charming and entertaining than me. But primarily, we want to be showing you stories of people who actually close. If you are a lender who is sick of the noise, or if you just want to sharpen your blade, then stick around, subscribe. Apple, Spotify, wherever you cast your pods. If you want to talk deals, come to midcapglobal.com, or you can find me on LinkedIn, Jesse Welch, like the grape juice. I'm very easy to find. Next episode, private credit, power shift, more money, more flexibility, more risk, or maybe I'll change my mind and it'll be something else. Thank you so much for listening. Go close something.